Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Raleigh White, and I'm here to talk to you about the trades we took in our live trading room on Monday, November 24th, 2014. We're looking at today's economic calendar. We can see there was only one significant event that we needed to be aware of, and that was at 8:45 when we had the release of the Flash Services PMI data, which came in lower than expected with a value of 56.3 versus an estimate of 57.3. This is one of those indexes where anything above 50 indicates expansion in the service sector. As far as our pre-market sentiment was concerned, things were fairly positive coming into the open. Now, the Asian markets had closed higher on the surprise China rate cut. The People's Bank of China lowered their benchmark lending and deposit rates for the first time in over 2 years last Friday in order to give banks more freedom and to help stimulate the cooling Chinese economy. We did see that the best performing markets were the Shanghai market that closed up 1.9% and the Hong Kong market closed up a full 2 percentage points, both markets trading near 3-year highs as the People's Bank of China takes a strong move to stimulate the economy. We also saw that the Australian market was up 1.1% on hopes that the China stimulus action will increase demand for Australian goods and services, particularly in the mining sector. As far as the European markets were concerned, they were open and trending higher on the European Central Bank stimulus optimism. Now, the banking sector was leading shares higher in Europe on hope that the European Central Bank will in fact announce new stimulus measures spurred on by the action that was seen in China. We also saw that sentiment improved after the German IFO Business Climate Index came out beating expectations with a value of 107.7 versus an estimate of 103.0. And then lastly, for many European investors, there will be a focus on the ongoing discussions between the international community and Iran over their nuclear program, and there will be a keen eye being placed on the upcoming OPEC meeting scheduled for Vienna this coming Thursday. As far as the United States is concerned, Wall Street figured to open up higher on the rally in the global markets. Now, the futures were pointing up coming into the open following the global marks higher on the People's Bank of China and the European Central Bank stimulus activities. But sentiment was being capped a bit by a new survey that came out showing that global business climate is actually at 5-year lows, citing tensions in the Middle East, the Russian expansion into the Ukraine, and also the Eurozone recession as being key headwinds working against global growth. Focus for many U.S. investors today would be on the Flash Services PMI report, which is due out at 8:45, and on tomorrow's gross domestic product data, and a ton of reports coming out on Wednesday with a key focus on durable goods orders. As far as my trading activity was concerned today, I attempted 5 entries in what were very sluggish sideways moving markets, and unfortunately had no fills, but I will share with you some of the opportunities that were setting up for me. But before I do that, I need to remind everyone of this following important disclaimer, and that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Well, turning to the charts, let's begin here with the E-mini S&P 500, where I had 3 attempts this morning. Right off the bat, you can see that we had 1, 2, 3 bars moving higher, followed by 1 bar retracing, and I was hoping that this second bar was going to retrace right at the open of the U.S. trading session and give me a long entry at 2064.5. I figured that since we had a large opening gap up, there would be an initial attempt by the market to fill that gap, but unfortunately the market moved away from me, and I was never able to get my fill. Staying with the E-mini S&P, you can see we had 2 bars moving lower, followed by 1 bar retracing, and I was hoping this bar was going to retrace higher and give me an entry just below the upper Bollinger Band at 2068, but we can see the market never really took a step in my direction, and I had to take this trade off. A little bit later on in the trading session, you can see we had 1, 2, 3 bars moving higher, followed by 1 bar retracing and a second bar retracing, and this gave me a nice long entry at 20.64 3/4, just off the lower Bollinger Band. What happened here on this particular setup is this bar opened up here, moved quickly through what would have been my profit target, and when it did that, I needed to take my entry out of the market, as I did not want to leave it there and be filled on the way towards a stop loss. Next market where I saw an opportunity was in the E-mini Dow market. Looking at this market, we can see right here at the open, much like we saw with the E-mini S&P 500, we had 1, 2 bars moving higher, 1 bar retracing, and I was looking for the second bar to retrace and give me a long entry at 17,801. We also saw a large opening gap up here, and I kind of felt prices were going to try to move towards the lower Bollinger Band and give me a fill, but they did not, and when that happened, I had to take this trade off. I then took a look at the crude oil market. And looking at this market, we can see the crude oil prices started to take off during the trading session, and when they moved above the main pivot point, rather than try to catch a trending trade into the current session highs, I decided to wait for a trend retracement trade, which would have been that first green bar that retraced where we lose the RSI, and that gave me an entry signal here at 76.76. You can see the market here came within 1 tick of giving me a fill and then moved through what would have been my profit target. This was the closest entry that I had today, and but unfortunately I did not get the fill. I missed it by a tick. The market moved through my profit target, and I had to take that trade off. So at the end of this morning's trading session, I had 5 attempts in the market, and I had no fills, and my plan was to come back in the afternoon and take a look and see if there might be some trading opportunities, including keeping a close eye on the crude oil market. Well, looking at the crude oil market after lunch, you can see that the market turned around and prices really started to move shorter, heading towards the previous day's low. And when I saw this move here, I decided that I would look for an opportunity to enter the market on a trend retracement trade, and I had a short entry here at 95.96. I was risking 10 ticks to make 10 ticks on this trade. So the market moved lower. We saw this first bar retracing. It gave me an entry. It took a couple tick move against me, and then when it started to move in my direction 5 ticks, I ended up moving my stops to break even, and I trailed the market by 5 ticks all the way down to where the market came. I guess it went about 7, 8 ticks in my direction, and actually, yeah, exactly that. It didn't come to my full profit target. My trailing stop was sitting here at 75.92. The market backed up, knocked me out for a 4-tick win, and then decided to move through my profit target. So I came very close to a 10-tick profit here, but the market did back up, and it gave me a 4-tick winner, which put me up $40 per contract traded on the day, and that's essentially where I ended my trading session. So just to recap then, there were 6 attempts in the market, no fills during the trading session, but 1 fill in the afternoon, up $40 per contract traded, and looking forward to seeing what kind of opportunities might present themselves tomorrow. Well, looking at tomorrow's economic calendar, you can see we have a few more things that we need to be aware of. At 7:30, we have the release of the preliminary gross domestic product report. That's followed at 8 o'clock by the composite 20 house price index, and then at 9 o'clock we have the release of consumer confidence data. Each one of these reports individually or collectively have the potential to move the markets, so hopefully that's going to give us some nice opportunities to trade. And with that, I'd like to thank you all for watching today's daily video. I wish you a pleasant evening. I look forward to speaking to you tomorrow. Take care and good night.